Dear friends, this is Ram. Today I would like to discuss the most important investment approach, which is specially to address this kind of volatile market and recent market correction. Many of viewers and subscribers are asking me that whether we can invest lump sum amount as market is corrected a lot. So today our discussion is centered to this point. First, let us try to understand SIP, systematic investment plan, and lump sum investments when they are suitable, and is there any other way to make use of this kind of market correction. So let us critically evaluate these aspects. Now let us discuss SIP investments, its features and benefits. As you know, systematic investment plan helps us to build a portfolio over a period of time with a small investments at regular intervals, which also reduces the market volatility. We will discuss these points in detail. SIP gives us the rupee cost averaging that eliminates market timing. We need not worry about market timing when we are investing with SIP. So since amount invested is constant in SIP, we buy more units when price is low, like in this kind of market, and less number of units when price is high, which effectively gives us the benefit of cost per unit get averaged. This is called rupee cost averaging. It is inherent benefit of SIP investment. Second most important benefit of SIP is we can start SIP with very small amount, like as low as 500 rupees. Third important benefit, probably this is the most important benefit of SIP investment, that we can actually plan our financial goals like kids education, kids marriages, purchases of house, retirement plan, etc. can be done using SIP investment. As we discussed, timing of the market is not necessary for SIP investment. Last but not least, this is also an important point. It creates disciplined approach of investments to investors. Do you know why most of the investors are afraid of stock markets? Because most of us must have seen losses in our portfolios in some time or other. For most of the people, feeling losses creates more burden than actual monetary loss. It is very difficult for us to digest the feeling of getting losses. As SIP investments are usually planned for long term and supposed to invest without considering the market timing, it would be great approach of investment to handle these kind of emotional issues. Let's also discuss benefits and features of lump sum investments. When you wanted to invest in equity funds, long-term tenure is suitable for lump sum investments like 10 years or more. But in case of debt funds, you can always invest lump sum because your returns most likely stable and predictable in debt funds. Other benefit of lump sum investments, you will get benefit of compounding from equity markets from the day one of your investment. But one key challenge here is timing of the market. This is also important. It makes difference in long-term returns. Third important point we need to consider in lump sum investment is that lump sum investment works well when you start investment in market slumps. Lump sum investment really rewards well when you start investments in market down years like in 2008. Now question is this a real slump like 2008? It's not. Because market didn't correct 50 or 60%, it's just about 10 or 15% correction. We don't know whether this correction will continue or will end here. But one point is clear that this correction surely gives us an opportunity to invest more. So what would be our approach to handle this kind of market environment? As we cannot consider this market correction like 2008, this is not a market slump. It would be better approach to follow a midway of SIP and lump sum investments. It's always prudent to continue your existing SIPs and add some more partial lump sum investments into your existing portfolios. For instance, you have rupees 1 lakh in hand. If you want to invest lump sum, in that case, don't invest entire amount at one go, but you split it, like you may invest 1/4 or 1/5 of the portion now and wait few more days or 1 month. Again look for the opportunity to invest. This way of staggering investment would help you to get market lows if market will down in coming days or months. In other words, if market will not down from here, you wouldn't lose anything. Anyway, you didn't miss the opportunity of market downs as you are continuing your SIPs and investing some partial lump sums as and when you get the opportunity. So reason behind suggesting this kind of midway approach is that if you commit 100% lump sum now, if market will down by another 20 or 30%, you may feel that you got trapped and you may feel sorry. So approach should be don't commit your entire lump sum but invest in a staggered way to make use of this market correction. Thank you. Please subscribe to my YouTube channel. In coming days, I'll be discussing many more educational issues like this and keep you updated how you can handle this market correction and mitigate your risks. Thank you so much.